Good morning, Mark Soderberg with ADM Investor Services with your morning egg outlook for Friday, June 27th. Happy Friday to all. Prices are seeing a little bit of a pop to the upside here. Corn right now 5 to 6 better at session highs. Wheat prices up 4 to 7. Soybeans backed up a little bit now, still 1 to 2 higher. Products are softer, steady to a buck lower in the meal, while bean oil is down 15 to 20 points. Many of these markets are oversold, particularly corn. I suspect the higher trade here is just a little bit of a short covering bounce ahead of the weekend, also month end and quarter end on Monday. Monday also brings quarterly stocks and acreage data from the USDA. Reuters survey shows the average trade guesses for corn, soybeans, and wheat acres, all coming in slightly above the March intentions data. Corn acres range from as low as 93.75 million acres to as high as 96.8. This versus a March survey of 95.3. The average guess is about 95.6. Soybean acres range from 82.5 to 85.3 million versus 83.5 in March. Wheat acres expected to range 45 to 46 million acres versus 45.35 in March. Corn stocks as of June 1st expected to come in around 4.64 billion bushels, down 7% from a year ago. Bean stocks at 980 would be just slightly above the 970 from a year ago, while wheat ending stocks for the 24-25 year marketing year expected to come in at 835, well above the 696 from the previous year. After today's close, CFTC will likely show in their commitment of traders report. Speculative traders continue to pile on the short side in corn. I guess that money manager short position has swelled to over 200,000 contracts. This for the first time since last August. Look for a record short position in meal, while their money manager long positions in both soybeans and soybean oil likely trend a little bit. U.S. weather remains mostly favorable. Rains continue to stack up along the northwestern half of the corn and soybean belt. This week's drought monitor showed corn acres in drought dipped 1 more percent to only 16%, down 1 in bean acres as well to 13%. Biggest area of concern continues to be Nebraska and southern parts of South Dakota. Rains this week have been pretty widespread in these areas, so I would expect some further relaxation of drought conditions and next week's drought monitor update. Also look for improved crop ratings on Monday. Extended forecasts continue to show non-threatening conditions out into the first full week of July. Dees corn's back above 425 this morning. I suspect the upside is probably limited with the old lows near that 435 area, unless we see a sudden shift in weather forecast or get a bullish surprise on Monday from the USDA. Buenos Aires Grain Exchange reports Argentine harvest is at 55%. However, they held their production forecast steady at 49 million metric tons versus USDA 50. At these prices, in my opinion, the market is discounting much higher production coming out of Brazil. That won't be updated from the USDA until July 11th, as their second crop harvest is accelerating. I also think the market's discounting record U.S. yields here in the U.S. Inside trade for old crop beans overnight. Nove beans did trade down to an 8-week low, however, held support from the very first trading session in May at 10.11.5, setting up a little bit of a rebound here. Bean oil kind of hovering just above that 52-cent level. We do get key biodiesel and renewable diesel production and capacity data on Monday. Wire services are reporting progress is being made in trade negotiations with China. However, no mention of ag-specific trade. New contract lows in meal. Wheat, need of some rain in Australia and Argentina. Plantings in Argentina have reached 73%. Thanks for listening, everyone, and hope you have a wonderful weekend.